Now, we move to our first panel discussion featuring distinguished speakers from STM, Mara, tZERO, Zoniqx, and Kula. They will explore 2024's milestones and the challenges of cross-border tokenization. Please welcome our panelists.
Unmute there. Fantastic. Thank you for having me and inviting us to do this panel. For anyone unaware, my name is Jason Barraza. I'm COO at Security Token Market. We're the original and largest data repository on tokenized RWAs. We track over 650 of them today, worth about $45 billion, always adding more. And so, I'm really honored to be here and work with, a lot of people that are in the industry building. And of course, we have a great set of panelists today representing obviously the respective firms, but also a lot of the innovation that they've been building in the tokenized RWA space. So with that, why don't we go down the line? I know, Taran, you just spoke, so maybe we can start with you. Quick 2 sentences on as a refresher on who you are and what Kula does. And we can go then to Prasanth and Aaron.
Yeah, absolutely. Thank you. Thank you, Jason. So I'm the marketing director for Kula. We're a blockchain impact investment firm, predominantly based across the UK and the States. The company officially is headed in Dubai, and we're heading towards our token launch in Q1 of 25.
Very exciting. Prasanth, how about yourself?
My name is Prasanth Kalangi, founder and CEO of Zoniqx. We're based in the US, expanding to other markets. We are the tokenization platform as a service and end-to-end infrastructure and middleware for RWA projects.
And Aaron?
Hi, everyone. I'm Aaron Goldblum. As stated before, I'm a product manager at Mara, formerly known as Marathon Digital Holdings. My team specifically, in which I'm a product manager on, is focusing on expanding the overall utility of Bitcoin, and we're doing so through tokenizing real-world assets on Bitcoin sidechains on a platform called Avant.
Fantastic. Thank you, guys. I know we have one more coming in soon, but why don't we get started? As a refresher for everyone, this panel is specifically covering a couple topics: key milestones and STOs and blockchain throughout 2024, and cross-border STOs, challenges and opportunities. So lots to cover, lots to dive into. So why don't we just go right into it? You're not allowed to say BlackRock's Biddle, but as we near the end of 2024, what would you highlight as maybe the most transformative milestone in the tokenized RWA space this year? And why do you feel that it stands out?
I mean, I'm happy to kind of, if you like, just take lead on this.
Please.
I think yeah, thank you. I think BlackRock's definitely was interesting. I think that BlackRock's necessarily, I wouldn't say was this year. I would say that's probably an ongoing conversation that they've probably been having for quite some time. I think this year just probably catalyzed things. But I think for Kula, it was the regulatory side, I think. And we've seen how that's changed over the past 3 years. As I said, there was a time 3 years ago where, and I'm going to be quite franky and quite simple and quite obvious here, there was a time where you'd go to different regulators and they'd probably just laugh at you and say, what you're talking about isn't a reality. And they try and fit you into a box of quite simply what you're not. I think for us, the biggest milestone of this year, and I think this is one, I think from Kula's perspective, but then also extrapolated to the wider market, is receiving initial approval for broker-dealer license, for an issuance license, for an exchange license, and being able to actually essentially work with and alongside regulators to really well define what it is that you're doing. And I think that process isn't something that wasn't necessarily brought to the point 3 years ago. So to be able to sit now in a position where we can say that we've been actively doing that, I think just speaks to the broader market and speaks to how well and how far we've come as far as real world assets are concerned.
I was not expecting regulatory to be one of the most, nominated, if you will. But it is interesting also to see, how regulatory changes, are happening between the U.S. versus non-U.S. countries, and obviously the clarity that comes with it, and what you're enabled to do as you are doing with Kula. Prasanth, Aaron, any thoughts? Yeah, go ahead.
I mean, yeah, sorry, one thing I'll say is absolutely huge. I mean, look, think about it like this from an investor point of view, or even from, for example, either you're an institution or you're a family office. The minute you have regulation behind you, it just saves them an absolute arm and a leg. Like, just think about it from an investment point of view. You're talking if we're talking about real assets, you have to think from a crypto narrative perspective. From a now, if you're in the Web3 space, regulation is not a thing. People don't even KYC. People don't put up their own photos. To be able to stand forward and say you're actually a regulated entity is absolutely massive. As Prasanth spoke about before. Now, finding exchanges which are even exchanges and market makers which are regulated is a hard task, and I'm sure that they, over at Zoniqx, I'm sure they've had the similar issue that probably I think a lot of companies have been facing. So I think the reason it's a big milestone speaks to everything that follows, right? I think whether it's the liquidity that's going to come to the market or has it currently in the market, whether it's the adoption, whether it's the number of innovation or the innovators or the builders or the community, whatever it absolutely is, I think the foundation is the regulation side. But sorry, Jason, to jump back in there, and I'll pass it over to Prasanth and Aaron.
No worries at all. I love the additional context.
Yeah.
Yeah, I think from my point of view. Sorry, Aaron, do you want to go ahead? Yeah, please go ahead.
No, please go ahead, Prasanth.
Yeah, so I think mine will be short and crisp, hopefully. So basically, I think I see it's a broader, I think from multiple 360 degrees, I think we have seen some good stuff happening in 2024 for RWA projects. Some DeFi projects on Solana are very good, which I've been tracking. Some treasury bills projects outside Brittle is good, which is outside US. Some projects in that space. And some projects in private equity, which are good. The one that I just told about, the $1 billion data center private equity on XRPL that Zoniqx is building, which is a very good thing. So the sense of the measurement of goodness is really the transaction volume. Then these are not there yet. I think the transaction volume is only the BlackRock one, and then the Benzi from Fidelity. So I think because these are already liquid in money market funds, but I think I see there is a completely liquid spectrum to the full illiquid spectrum, right? RWA. So the liquid spectrum is money market, treasury bills. We are coming there, but the illiquid spectrum is also coming. I think we are going to be meeting in the middle. I'm not really quite there. Fully illiquid assets coming. So I see broader acceptance from the market that there is something called RWA. We have to take it serious. No more pilots really getting onto mainnets. Multiple blockchains trying to solve this problem, going after this rat race of getting right projects on their blockchains, right, is another thing. And the DeFi play coming into RWA, which I find it very interesting space there. And the assets that are on custody, assets under custody that are locked, are trying to find ways how they can make extra use cases by lending or borrowing protocols in between there, which we are realizing that. So I think my answer is very broad because I didn't want to pick a specific project because it depends on the transaction volume. Transaction volumes can be different based on projects and jurisdictions. But if you see the regulation clarity, as Taran was telling, I think is also very, very, very important. And then that's happening from Singapore, from Dubai, Abu Dhabi, right, Hong Kong, even FCA in UK, BaFin in Germany, with the MiCA coming into picture. All positive things are happening, right? So, but do we see the critical mass is there right now? So I think it's just going to take off. I think later part of 2025 is what we firmly believe.
That makes sense. And on the liquid asset side, to your point, there's plenty of opportunity out there, and plenty being tokenized. Money market funds that invest in treasuries themselves, and so forth. I think it's a great step for people to kind of get
even stable coins, right? Even
Yeah.
stable coins, right? I think I think you Jason, you were, I think Herwig or you both were there, I think in New York, I think in Centrifuge, which they talked about the stable coins issuance, right? It's a form of RWA, if you see from it. So I think I anticipate at least 100 more stable coins coming in the next 6 months to the market. A large multifamily offices are going to issue that. Blockchains will be issuing it. Even Ripple announced they're going to do RLUSD, right? And then the Paxos one, the combination. So it's kind of an example of a RWA indirectly. So the payments is a critical infrastructure. You'll see more. And most of them are successful stable coins, right? That are happening. I think a lot more will come.
Yeah, absolutely. And look, it's stable coins are essentially tokenized cash, right? And so, when
Yeah,
you see
there you
trading
go.
pairs out there, it's always, for a dollar or a euro or whatever. But eventually, we feel that, aside from the money market funds, which we've, seen coming on chain a lot, we've also seen other assets. And eventually you're going to have a risk on pair where you don't go to cash, but you still need that for a settlement in terms of, other applications. So I'm excited to see how that evolves, especially in the next coming years as more assets come on chain. I do want to give an opportunity to Aaron, though. What would you say is the most transformative milestone this year so far?
Yeah, I think you guys pretty much covered it. I would say 2024's big winner in terms of RWA are tokenized fixed incomes, whether that be T-bills, bonds broadly, or money market funds. Obviously, BIDL's a big one, although there are other great ones out there like USYC, Hashnote, and of course Franklin Templeton's Benji. I think the fact that these incredibly liquid cash and cash-like assets, and when I say that I mean fixed income, and then of course cash, meaning stable coins. The fact that those were tokenized perhaps gave us some further insight onto where this market is headed and why. So perhaps, and I'm sure a lot of people on this call have been in the RWA space for a while. And the pitch was, hey, let's take all the assets in the world, right? Commodities, real estate, fixed income, equities, whatever it is, and put it on the blockchain, and we'll wave a magic wand, and then the markets will be more liquid. It'll be great, right? Well, clearly that's not the case because the best assets on chain, real world assets on chain, are already liquid markets, which just says, okay, blockchain doesn't solve for liquidity, which if you think about it, actually makes sense. I mean, maybe you can access a little bit of like the Bitcoin whale liquidity that perhaps wouldn't want to put it anywhere else that's off chain. But besides that, the fact that these fixed income assets have been so popular in 2024 just proves that the real value prop is atomic settlement, it's alternative asset transfer peer to peer, it's automated capital calls, automated, yield provisions and dividend provisions that you get through fixed income assets, cash and cash-like assets. So perhaps that'll help with the narrative a little bit. And, there's nothing wrong with saying perhaps if we put it on this chain, it'll be more liquid. We can democratize access by having lower minimums for investing in these investment vehicles. But besides that, let's really focus on what's been working and build out from there.
That's an interesting take, and actually that kind of leads into my next question, which is on the institutional side. How have you guys seen this shift this year in terms of how they're approaching security token offerings or tokenized RWAs versus previous years? That to your point, Aaron, we've all been in the space for a minute now. So compared to those years, how has today been transformative for institutions and how they're approaching this space?
Jason, would you say from a issuer or from an investment standpoint?
Let's talk about issuance. I think that's probably the more active of the two.
Yeah, I think that's a really good way to sort of frame that question because of the changing in compliance mechanisms, regulatory landscape. Even in the United States, we'll see what happens under the Trump administration, but more so in countries like Singapore and the UAE, Germany, and the others that were mentioned before as well. The fact that Bitcoin's going up, the market cap of crypto broadly, is gaining the attention of institutional investors, institutional asset managers, just means that there will be more openness to experimentation, especially if legislation becomes more favorable, which means the Fidelities of the world, the BlackRocks of the world have already done it. The larger asset managers in the United States and outside of the United States will have more of eagerness to experiment, which means there will be a lot more issuances in fixed income assets. So there'll be more pilots, if you will, from the Schwabs, from the real TradFi individuals. I think we'll see Goldman Sachs emerge with something interesting with a marketplace they announced the other day. JP Morgan Chase will continue to experiment. A lot of the large consulting firms, I think, will push their clients in the way of, hey, there is this, blockchain infrastructure you can utilize to perhaps do these great things that I mentioned earlier, like atomic settlement, faster access to capital. You don't have to wait 6 months to fully fund your your real estate investment trust. Instead, it can be like the day of, you can get those capital, you can get those capital calls. So the fact that there's a mix between the market's super hot right now and legislation is moving in a more favorable way means that there will likely be a lot more experimentation. And experimentation is great because the more people that try it, the more people that will actually be onboarded onto the technology and build great, robust products for investors.
Fixed income is a interesting area. We track $20 billion worth of tokenized fixed income, and honestly, a big trend is that while it's really great that it's coming on chain, a lot of the institutions are kind of issuing it to each other or within different arms of the same institution. So I think that there still needs to be a little bit more way of adoption and accessibility. But then of course you have other more startup and retail friendly applications out there that are also offering the fixed income spot. But I think, Aaron, to your point on the utility that comes from putting fixed income on chain, I think that's really powerful. Other panelists, any thoughts as well, or varying thoughts on institutional interest?
I think the institutional interest is peaking quite a bit. I think they're moving beyond pilots to actual usage. I see a lot of either investments that are pumping in by the institutions to custody engines and licensed custodians is a signal that they're building the foundational capabilities inside their institutions. And also I've seen them pumping money into risk analysis and risk modeling technology for crypto and Web3 in general. That showcase, so how they want to analyze this, because they don't have the necessary tools, because it takes 3 to 4 months for them to analyze something on a risk basis, because there's too many variables and it's a new space and niche. These two are signaling that there is there. Of course, there's intra settlement, as you said, right? Intra institutions, intra banks are happening, repos and everything. We see Standard Chartered coming into this picture. I think Adam mentioned about Goldman Sachs. They've been in this for JP Morgan Chase. Even I'm hearing rumors that Bank of America will also be coming into this. Probably in the next 2 weeks, we'll hear something about it. So, I think this is going to inevitably, it's going to happen. I think it's just a matter of time. All these guys catch up. As soon as the push is coming from the top in terms of regulatory clarity and the investor confidence is happening and people are asking more, the Schwabs and the Fidelities, hey, what is this? Why am I not seeing these things? They have to be there. But I have a question, Jason, as well, from my side, which is a curious question. Since I see David joined from tZERO, right? Formally, David, hi, Prasanth. We never met formally, but I know your company, and then I've spoken to a few of your colleagues before. So, the Robinhoods of the world are also thinking to list some of the tokens on their side. And then maybe this is a question down the line, which I want to park it. But I really want to see how the distribution landscape will change when these guys come into the picture. These are your regulated ATS. I get that point, but that's a question that it's a curious question that I have. And then maybe if you can answer me before you end of this panel, that'll be great.
And actually, maybe start with a quick intro, David. I know you joined a little
late. Got my times mixed up a little. Sorry.
No worries.
Yeah, so I'm David Goone. I'm the CEO of tZERO, which is one of the first people on a blockchain regulated ATS. So, and a broker dealer. In my previous background, I was one of the original management team and founders of Intercontinental Exchange, ICE. So I have a lot of market experience in building those markets. So I think I'm gonna, I guess if that's a question to me, I think it was, is that I think we're going to have to see what the regulatory issues are. I think some of the people, the larger distribution people are waiting, I think, regulatory clarity on some of these issues, because no one wants to be fined under the current SEC regime for listing assets that are deemed securities. It's simple as that. So I think it's a cart before the horse. I don't think I can answer the question. I don't, these are Some of these are public companies, and I don't see them getting into venues unless they feel they are comfortable from a regulatory standpoint. They can partner up potentially with, people like ourselves or others who have some of the regulatory stuff. Like I said, we have a special purpose broker dealer license now, which means we can custody digital assets and trading the digital assets, but as securities, right? We're doing them as securities under the SEC. As crypto, including Bitcoin, which is regulated more, at least Bitcoin right now seems to be more of a CFTC regulated entity. I think once that all gets clarity, I think they'll know how to trade it and what they're going to list. But certain tokens, I think, regardless, are going to be securities. There's just, in my opinion, no way around it. It's just how they're going to get regulated. So I think that's still the gating function before you start seeing it. Now, assuming it's hard to answer the question, how's the game played if I don't know the rules? So I think you're asking, how's the game going to get played? And I don't know the rules. So that's a tougher guess. I can guess at the rules. And then I think the game, will change, but, depending on the regulatory environment, is it CFTC, is it SEC, how loose, how the rules are going to be enforced. I think there are still going to be, in general, I think regardless of what comes out, I would imagine there's still going to be a lot of anti-money laundering rules set in place in the US. I think that's probably the primary concern that the rules are going to have to address. Like, how do we know this isn't, bad money, for lack of a better word? I think, that's the job at the 50,000 foot level for the regulators, and that should be their job. Everything else, we could all debate. So I think once that's answered, then we can kind of determine how it goes. But there's enough money going, and the way the market looks is that it will go in some manner or fashion to a wider distribution. And then I think you'll see a lot more activity in what I would say, digitization of some real world assets that will take broad acceptance, like a Bitcoin, like a Bitcoin. Now, it won't be as active as a Bitcoin, no, but I think you'll start seeing more secondary trading of those assets. But to make a long-winded answer, I think the others aren't going to get in. They may be preparing and they may be lobbying for how the rules are going to be, but I think the rules going to have to be laid out a little more before you see them jump in. I don't know if I answered your question, but at least in the US, I'm saying.
Yeah, and I think you did. I mean, I didn't want to put you in a tough spot there, but I think that's a curious question that goes on, because we've been integrated with a lot of exchanges, which are ATSs in the US, right? So we are a US-based company as well. Yeah, and I think we are also curious. I'm also waiting, because the distribution is the key problem for all these assets that are being tokenized. And then we're trying to solve the problem by launching a product called RW Connect. It'll be launched Q2 of next year. So we are getting hooks into all the engines that are already regulated exchanges with the broker licenses for amplifying the issuances across all the assets that we tokenize. So
yeah, and look,
thank
you could look at it how the crypto market evolved. Let's just take a look at that. I mean, everyone says they're all on the blockchain. Let's just be honest. A lot of these places are all self-contained silos, right? I mean, you're not really trading every asset on the blockchain. Let's just be real. It's not that. You're trading within a silo, and at the end of the day, the basically net goes to the blockchain, right? That's how it works. We all agree, so, and I'm not talking about the world of, I'm recording a real estate, I'm taking out some of the, I'm not putting a real estate transaction on a blockchain. Yeah, that can get done when it gets done. That's not being netted out at the end of the day. But I think the issue is then in the crypto world, what happened is then a whole bunch of people started interconnecting all the exchanges, and the people who did it early made a lot of money, and they're still making a lot of money by the arbitrage between the various venues and sending orders that way. And that'll probably happen the same way with the real world asset, and maybe that's what you're referring to. But there, the rules will be the rules. It'll be more the interconnections and the piping that is probably going to start providing the wider distribution. And it may happen that way.
That's interesting. And from a TradFi perspective, we also heard of the OTC markets starting to explore the space, and they're an interdealer broker, meaning that they can essentially connect different BDs to each other and reroute order flow, if you will, to try to bridge some of those silos. To your point, David. But of course, there's also the narrative of tapping into the crypto market and getting them into RWAs, which actually, Taran, I am curious, because you guys are probably the most crypto native or crypto-like company on the panel here. How has DeFi grown throughout 2024 with respect to RWAs? And how is it impacting and transforming traditional investment practices?
Yeah, absolutely. I think one thing that I think I'll just touch on before I go into that is that with regards to institutional interest, I think what was quite interesting, I remember going to it's based in London. We went to this event and I spoke to a representative from Binance, and I believe this was going back maybe just over a year ago, Bitcoin's price was maybe touching 18,000 to 19,000. And with regards to Binance research, institutional interest was at an all-time high. So I don't think that institutional interest kind of comes hand in hand with price action. I think it comes down to the foundation of the technology, and rightfully so. I think, as Prasanth and David are talking about, the amount of friction points, as long as they're reduced, institutional interest is going to continue to increase when you do have regulatory clearance and clarity. It just makes sense. I mean, there's so many. I mean, even just from an individual retail perspective, I mean, there's so many people that are investing into Michael Saylor's company, MicroStrategy, just because they can do. It just makes life so much easier for them. And a lot of it isn't necessarily about, it's kind of like, it's the nitty gritty of things. Once you make things easy, then people are going to invest because it's easier for them. And it's the same thing now from a crypto narrative perspective. If you've got, if you launch a token on a DEX, on a decentralized exchange, someone's going to have to buy, let's say, for example, it's on Uniswap, someone's going to have to buy Ethereum. So they're going to have to KYC to buy Ethereum first. And then they're going to have to put it onto a decentralized wallet, or like, say, a MetaMask or something. And then they're going to have to go over to Uniswap, and they're going to have to swap some tokens around to get the gas fees sorted. It's just an absolute headache. And you could imagine that's for a retail investor, never mind an institutional investor. How on earth are they going to get the buy-in? And imagine you're sitting there, you're trying to explain to somebody on a panel, and you're saying, right, this is how we're going to invest into this token, or this is how we're going to invest into this project. They'll laugh at you and they'll just say, oh, that's a scam. So I think that's where, exchanges like Coinbase have done it really well. They're kind of, if you like, they're positioning themselves, I think, as a bridge between the Web 2 and the Web 3 world. I think there's a lot of companies that are doing that quite well as well. I think where I've seen it from the DeFi side and the crypto side, I think there's a lot of savvy investors now that are investing into crypto assets, not just because they want quick returns and they want to make a lot of money, but more so it's a 2-point, I think, investment point. One is a case of they want to see social impact. And I think the second side is now actually they want to invest into something which has genuine utility. So yes, of course, there's going to be an increase in the upside and it has a long-term potential, but it's not just about meme coins anymore. Not to say, and there's a whole use case for meme coins, funnily enough. And this is, I think, something which, if a lot of people find it difficult to understand, I'd argue that meme coins are tokenized communities, funnily enough. We're talking about tokenization, the upside of real world assets. It's exactly what a meme coin is. People are basically just buying into a community and they love being part of a Telegram chat and then, being part of this cultish like community. And that's essentially why they're performing really well. That also then comes hand in hand with, I would say if you look at the average type of investor by age and by generation, it also fits very well into social media. It fits very well into the types of shows people are now watching. It fits, this is the meme coin culture is very kind of, it's a broader, I think a broader reflection of, you know, the current what's the word here? I think it's just a broader reflection of the current market, I would say, you know, the current young investor, what they are looking for in investing. And this isn't just, for example, in the States or in the UK, or, you know, what about, for example, you know, Vietnam? What about, for example, in Nigeria? What about Turkey? What about, for example, you know, Dubai? A lot of these, you know, you have really smart innovators, and this is now the funny point of RWAs. You have a lot of smart innovators who simply would prefer to, you know, to not go into RWAs or not go into these, you know, more utility-based tokens purely because at the minute there's no regulatory clearance and no regulatory clarity, and without that, they're not going to have the liquidity that they deserve. And going back now, I'm just going to bring it all the way back to David's point. I've seen it from a Kula perspective. Regulation is very expensive. It's very timely. There's a lot of people that say that they can get you through and they can do things for you. And I think the truth of the matter is that there's a lot of people that are trying to work it out themselves. That straight away, it takes projects out. And I think, you know, if I'm speaking now from a US perspective or even a UK perspective of, you know, for example, FCA regulation, I'd love to, for example, say that, you know, we can work hand by hand and side by side with the SEC or with the CFTC or with, for example, the FCA. But I think the reality is that, you know, from a startup perspective and from a younger project type perspective, it's just simply not possible at the minute. They don't have the structure in place to facilitate that. I think that's why you're starting to see a lot of people now go over abroad. You know, you mentioned Hong Kong, you mentioned Singapore, you mentioned Abu Dhabi is a big one at the minute. You know about Dubai, you know about Vara, etc. That's why you know, they essentially are welcoming projects, I think, with a, you know, wider arms as such. So it'll be interesting to see how that evolves over the next couple of years. But I think from bringing it back now just from the community and DeFi perspective, I think people are really savvy. People are understanding RWAs a lot more, and I think there's a real market for it.
Absolutely. And do you see, are there any applications in DeFi that you think are kind of, you know, star examples of how RWAs and DeFi blend? And also tell us a little bit more about how DAOs are playing a role. I know you guys have one, so I wanted to touch on that too.
Absolutely. I mean, look, one thing that I'll say about Kula, which is quite funny, we're not actually a true DAO. We're a semi-DAO. So we're a semi-decentralized autonomous organization. And the reason being is because I think true decentralization can lead to utter chaos. If you have 5 people in the room making a decision and they're not savvy enough, or they don't have the business acumen, or they don't have the experience to make the decision, well, quite frankly, they should not be the ones making the decision. So you do need somewhat of a centralized approach to decentralized processes, because otherwise it will just lead to, you know, just mutiny, is what I would argue. From a DeFi perspective, so from a Kula perspective, you know, we are, you know, as I said, you know, we're a crypto token, and we are in the crypto space, and, you know, everything that comes with that, whether it's the DeFi side, whether it's the TradFi side, we're basically a blend of the two. From the DeFi perspective, I think what's quite interesting, what people have taken to really well, is the governance protocol. Is the fact that they can actually be part of decision-making processes. So let's say, again, you know, as an example I used when I did the presentation, was, you know, if somebody wants to make a decision, let's say if Kula wanted to invest into the STO summit and they wanted to invest, say, $50,000, well, an investor now can actually be part of the decision-making process. A big thing in crypto is this whole thing of, you know, essentially you're representing the bags that you hold. So let's say if you hold a Kula's token, let's say you hold 1 million tokens, now all of a sudden you're going to take to social media a lot more, because you're an active investor. And also, you're not only just an active investor, but you're also somebody that actually represents the project. So it's a two pinged approach. So I think it's going really well. I think it does bring a lot of eyes onto the market. I think it brings a lot of eyes onto projects. And I think this whole idea of active participation, governance protocols, and being part of a community is the real thing that's attracting a lot of these Web3 investors.
Very interesting. I think we're going to see that grow a lot more over time, especially as people kind of become even more familiar with RWAs and how, or as more utility gets built for them as well. But with that, you know, there are other emerging blockchain technologies, protocols, and applications being built around RWAs now, especially this year. But I know, Aaron, you guys are building more so on the Bitcoin side of things. Tell us a little bit more on the rationale on why Avant and Andorra are building more on Bitcoin.
Yeah, I think that's a really good question. So I think leveraging Bitcoin's brand and the fact that we're a large Bitcoin miner is going to help out from a distribution standpoint. I think a lot of the institutions that we've spoken to were perhaps more compelled to want to leverage the Bitcoin platform as opposed to a platform that maybe they've never heard of or that's only been around for a couple of years. From a security and brand recognition standpoint, I think that definitely helps. There's a reason why so many institutional investors and retail investors like to trade on Base. Completely honestly, there aren't that many Base validators. In fact, most of them are probably in Coinbase's headquarters somewhere, which means it's not a very decentralized protocol. However, the fact that it's backed by a publicly traded company means that there is some trust because you can just go and look at their balance sheet and see, how they're conducting their business and how much cash they have on hand. And we think Bitcoin sidechains can act in a very similar way. We don't want to say let's centralize everything, but I think the fact that it's backed by Bitcoin and Mara is perhaps turning heads for issuers that want to leverage blockchain technology. And I think that's showing as we have developed this platform Avant, piloting with whiskey barrels as I demoed before. However, there's some great interest from other institutional issuers that want to leverage this, not only blockchain, but tokenization engine and marketplace to do so, because perhaps it's a little bit more comfortable than a name that they haven't heard of before. And of course, I mean, Bitcoin is the most secure and most immutable blockchain there is out there. And I'm personally not a maxi, but it is true because it's been around the longest.
Makes sense to me. Yeah, no, of course. And I know you guys have a different narrative too and purpose as well on building on Bitcoin, something along the lines of finding other revenue streams from fees and so forth. Tell us a little bit more about that from an infrastructure standpoint.
Sure, and I guess I'll get a little philosophical here, but of course we are Bitcoin miners, so our job is to secure the Bitcoin network. Bitcoin needs Bitcoin miners to, for its security and for its immutability. Without miners, it's not decentralized and transactions wouldn't get validated, right? Now, something happens every 4 years called the Bitcoin halving, in which the subsidy that Bitcoin miners are paid for gets cut in half. That recently happened this year. It'll happen again in 2028 and so on and so forth. Because of that, the incentive mechanism is going to continue to shrink and shrink and shrink, and a few things will happen. There'll be a ton of consolidation, which isn't great for this decentralized network. And perhaps it'll just be less feasible to mine Bitcoin. In other words, it'll be less feasible to actually validate transactions, and it might become more feasible to attack transactions. Now, I'm not at all saying that Bitcoin miners are incentivized to attack transactions. And, certainly I'm not saying that, we are incentivized to do that whatsoever. We want to maintain the security of the Bitcoin network. However, in order to be continually incentivized to do so, there needs to be more transaction fees. There needs to be more transaction volume so that Bitcoin miners continue to be incentivized in perpetuity, right? What happens in 100 years when that block subsidy goes to zero and there are no transaction fees? Why would I mine Bitcoin? I'm not incentivized to do so. The beauty of securing the network is because there is a robust incentive mechanism. And the only way to have that maintained is to build around Bitcoin. If it's not apps on Bitcoin like Runes or BRC20s, then it's Bitcoin sidechains that feed transaction fees back to Bitcoin miners at the end of the day through processes called merge mining, ZK proofs, whatever it is. A more robust fee volume ecosystem on Bitcoin, again, I'm getting a little philosophical here, is 100% necessary for the longevity and the security of the network.
That's really interesting in terms of the rationale, of course, as to your approach here. And we've seen other assets out there as well offering investors exposure to Bitcoin mining through obviously a security at the end of the day. But what you guys are building is infrastructure on the network, which based on that rationale, I think it's a really interesting take there. I know that this is a two topic panel here, so we kind of covered highlights from 2024 and emerging technologies here, but I also want to talk about cross-border STOs in terms of both challenges and opportunities. David, platforms like tZERO, you guys are dealing with international investors as well as US, right? So what are the biggest challenges that you face in providing seamless cross-border tokenized asset trading? And maybe touch on how the SPVD might be able to, if at all, will help facilitate that.
Maybe that could get addressed more when my chief, when Alan Konevsky speaks on his point, but I don't think of it that way. I mean, I think the SPDR is not necessarily the special purpose broker dealer. I'm sorry, is not necessarily the answer to the international question or the cooperation question. I think, look, let's take out digital assets and everything else. This is really just a simple regulatory issue. We right now are doing securities. So as securities, we have to comply with the SEC and how we do US laws on how we coordinate with foreign. So you can do a Reg S offering, which is outside the US, but then you have to comply with the various jurisdictions of the investor. So, you know, certain countries are easy to deal with and certain countries are difficult to deal with. So certain countries we can deal with and certain countries we don't. So there's certain countries you have to have a local partner potentially in order to solicit, and how you solicit the investor. And we've seen some other platforms actually be relatively, at least appears to me, relatively loose or not enforcing those rules. And I think that opens them up to regulatory, potential regulatory liability. I should say potential, but because it only appears to me that they're not complying with the local jurisdictional laws of how you solicit people. So the question's really more old school, and we spend a lot of time on it. We look at where somebody wants to list their asset and how we can or cannot comply with the local regulations. So that's kind of how we do it. So certain countries, like I said, work really well for us, and others are difficult, and we say we can't do business there. Alternatively, what we have been doing is we're in discussions with several people about partnerships where we may be the U.S. Regulatory arm for the asset, and asset outside of the U.S., you know, similar or virtually identical asset, and try to make seamless a process for the investors. So if you're certain jurisdiction, you know, you're buying the asset there, and if you're in the U.S. On a different platform, and in the U.S. you're buying it on our platform, and then the trick is to make that as seamless as possible for the user experience, which isn't really that hard. That's just a, you know, little bit of user experience issue, a UX experience, than it is a technology issue. But that's how we deal with it. But I don't think this is, you know, because we're not talking about crypto now, where, you know, there's lots of issues still not defined, but in general, for our real world assets or our tokenized assets, you know, it's not a digital or a blockchain issue. It's just, you know, simple securities law.
Yeah, at the end of the day, I think a lot of topics and problems in the space, you know, boil down to not even a tech problem. And to your point, David, at the end of the day, it's really what's in writing and how do you interpret it versus others. Curious, you know, have you guys seen, both of you, have you guys seen any regulatory arbitrage playing a role in this space this year?
I haven't seen what I would call regulatory arbitrage. I mean, I'll just answer the question. I see, which I think Tara was talking about, I see people going to different jurisdictions. You know, I know some people who decided, look, the US laws are too murky or not clear enough, so we're going to start our business outside of the US and not have any US investors involved. I do see that. I don't see people, at least, and I hope, you know, I think you can get yourself into some potential liabilities. I don't see people doing, what I think of arbitrage in the pure sense of the arbitrage that may be going on. Once again, I think that's opening yourself up, depending on how it's done, to potential liabilities. What I do see, which I think is people running businesses, and very successful ones, going after non-US customer bases, and they're, I see some very successful, huge amounts of customers and volume, which tells me there's a huge potential in the US. It's just the regulatory rules have to be, better defined. But that's how I see it. I don't know how anyone else does.
Aaron, any thoughts on it?
Yeah, I would say, because, my team works for a publicly traded company, we're not interested in, regulatory loopholes. We definitely want to do everything by the book. We're hearing a lot of positive information in regard to education for these legislators, and, these elected officials. I've spent, I think, 4 or 5 visits now to Capitol Hill. Shout out to the Digital Chamber. They host Mara quite often, and I often represent the technology team. So I'm able to speak on all things like real-world asset tokenization, how it empowers the average, perhaps unbanked American, or, perhaps empowers them to be able to access stable coins or US currency without opening a bank account. Decentralized finance can empower individuals as well. And of course, chatting about the benefits of Bitcoin mining broadly for grid stability and whatnot is something that, I guess it doesn't come too much as a surprise, but elected officials are very busy people. So they don't have time to, read degen blogs on what's going on with the latest meme coin. So to give something that's super palatable to them in regard to, hey, this is what's happening, this is how it can benefit you, and more so, this is how it can benefit your voters, I think is super important. And likely because this 119th Congress that's coming in a couple of months is very pro-crypto, we'll likely see a lot of this education perhaps turn into bills and eventually regulations and laws, which is very important.
Let's hope. I know the House just recently announced another hearing coming up soon, compared to the one that we had earlier this year. So excited to see, who else will be speaking. I know that's to be announced, and what perspectives they share with those regulators. I think since the last time they had a hearing earlier this year till now, there's been plenty of innovation and plenty of things to touch on, that I think some of them might have, interesting questions around. With that in mind, kind of sticking to the platforms that you guys have and what you're building, as well as the issuers that you're talking to, looking ahead, is there a way that blockchain networks and platforms can foster greater standardization to facilitate a little bit more of a global STO issuance and trading?
I think yes, but you have to be careful with the word standardization because there's a reason why different countries have different laws. And again, I don't know the nuances of securities laws in the United States versus the UK versus the European Union and whatnot, and so on. So I think there's a reason why there are some subtle nuances. There's differences in cultures, differences in population, socioeconomic differences broadly. So to say that there should be a standardization in how consumers and investors stay safe is, I wouldn't say dangerous, but for lack of better terms, perhaps not the best idea. Let's keep it on a country-to-country basis, right? Let them figure out what's best for their individuals. When it comes to standardization, and yeah, I had like a second point. What was the second part of that question?
Really, the idea is, and what I'm trying to get at here is standardization. I guess maybe from a tech perspective, to be able to facilitate those trades cross-border. To your point, yes, every jurisdiction does have their own regulation and so forth, but eventually you do want these traders to be, and there's the investors to be trading with each other, and so there has to be a way to, again, facilitate, make sure that we're staying compliant, but also facilitating that interoperability, if you will.
Right. And I don't think that there's a pure answer for that right now, because if you want to sell, I'm speaking just for securities and not commodities, because this is, the security STO summit here, right? If you're a U.S. investor and you wanna, or U.S. issuer rather, you want to issue assets to the global audience, you need to file a Reg S with the SEC, and then you can do so. If you don't do that and you file a Reg D, well, then you can't offer from a liability standpoint. Really, I mean, it's a little bit more difficult for international investors. So it's one thing to say, okay, we can have one chain that perhaps you can geofence and say, or maybe not one chain, but one platform with multiple chains, and any issuer from anywhere in the world can issue on this platform. But there's geofencing. So if it's Reg S, then perhaps non-US citizens can see these assets and invest in them. If it's not Reg S, it's Reg D, then only accredited investors in the United States can invest in them. So geofencing, and I think this is done with most platforms. I mean, most e-commerce platforms, right? I'm assuming, and I don't know how global Amazon is from like a distribution standpoint for retail, but I'm assuming the products that I see in the algorithm that I see on Amazon or any average e-commerce site is not the same as someone in an African country or European country or an Asian country, just based on a multitude of different factors. And legality being one of those factors, but socioeconomic, cultural differences as well. I think RWA markets from a standardization standpoint will be the same, where it's all the same market or markets broadly, primary markets and secondary markets, but the assets that are viewed and the ability to access those assets will differ on a country to country basis.
Any thoughts, David?
I kind of agree with most of what Aaron said. I think that's just, I mean, it's the lay of the land right now. I mean, I think the cross-border issue, to get back to the cross-border issue, I don't necessarily think this is our industry, just like Aaron was talking about with Amazon. I mean, I think this is just cross-border trading, issues. That's it. I mean, I think for our platforms, I'll go back to it. Aaron referred to it. More regulatory clarity will help some more arbitrage opportunities that I think you were referring to. But right now, everyone's trying to do everything compliant, just like Aaron is and we are. There may be some people out there that aren't, but that's not a world I want to live in. That's not a world I think Aaron would want to live in, regardless of whether we were public companies or not. Whether you're a public company or not a public company, doing something wrong in the rules, doing something wrong is just doing something. Let's just leave it at that. So, that's the only thing I'll add to it, as I think we look forward to seeing what rules are going to be out there. The only comment I would go back to some of the things that Aaron referred to is, I think this is going to be decided by a few people and pushed through Congress. I don't think they're going to be well educated on this. I think this is going to come from a few people who are educated or have some self-interest. That's just the way it is. And I think it's going to get, based on what I can tell, pushed through. And my guess is, as long as it's, explained at least at a 50,000-foot level, things will probably happen and go through. I will just say, back to my original comment, I think at the, whatever you want to put, the highest level, money laundering and bad money is really the only thing that's going to be of a concern, in my opinion. Not the only thing, the main thing that is going to be of concern that needs to be addressed for the rules, which may be very sweeping, changing rules to get to them.
Yeah, and I think I meant more so, just from a tech perspective, to be able to enforce essentially the rules that we're talking about, right, David? So, we've heard of, Coinbase and their smart wallets, self-attestation to live on chain, or WisdomTree on an X Spaces was talking about having a soul-bound NFT. The idea being that, like, if you already passed KYC AML once with WisdomTree, who, many people kind of trust, then other applications might be able to read that and say, hey, okay, you're good to go, and you can go ahead and participate.
Well, okay,
Yeah,
so look, we're a special broker dealer. I can't trust, at least as I understand the rules. And look, I mean, I'm not the right guy to answer this question, but typically, you can't just say, hey, because someone else did it, I'm going to do it. Just because something, like just because a stock was listed on NASDAQ doesn't mean, if it switches its listing to NYSE, that New York Stock Exchange isn't going to do its own due diligence. I mean, that I think is, let's see what the rules say. Maybe the rules will change that way. I don't think so. I could be wrong. I've been wrong before.
Fair point. It's a fair point.
But I mean, if someone's, say, hey, trust it because your competitor trusts it. I don't know that that's the best answer. If I was in a court and said, well, but he said he did it, why shouldn't I trust what he did? And he did it, through his technology, and I was fine with his technology. I don't know that passes, to me, the smell test, at least in regards to those types of issues. Will there be some things from a technology standpoint that might be interchangeable? Potentially, but once again, I get back to my 50,000 foot level. These are technology's just trying to solve the regulatory issues in that regard. We still have the regulatory, so.
Yeah, no, those are all fair points. Not necessarily trying to solve the regulatory issues. To your point, they're regulatory issues. It's more so, once they're established or once we know what needs to happen, then how do we enforce it on chain? Any thoughts, Aaron? Otherwise, I think I have one more question before we close it out today. I know that there's another session waiting up.
Yeah, just quickly, I think David, I'm inclined to agree with that. They're called walled gardens for a reason. For now, that's the standard, the quote unquote standard, right? There's going to be Franklin Templeton that does their own due diligence. They're not going to trust what BlackRock does and vice versa. And they're going to have their own ecosystems that can, buy and sell these RWAs. And that's the way it is. We can idealize and say, maybe it shouldn't be, but currently, as I said, they're walled gardens.
Fair enough. All righty. Well, like I said, this was a two-topic panel. We were talking about cross-border STOs. We were talking about highlights in the year. As we enter 2025 soon enough, what key trends or developments do both of you see, coming to market, and what should we be looking out for?
I'm going to go first, if you don't mind. I think a lot of this was addressed earlier, probably a little bit before I got here. I think the amount of institutions, therefore institutional efforts I'm seeing are going to come to a lot more fruition. We talked about hearing some of the bigger institutions, Goldman, JP Morgan. I think they are going to be dipping their toe with real products out there. And I think they're going to come definitely in 2025. And we'll see what the appetite is. I think for sure that's going to, you're going to see that trend coming probably the first half of the year, a bunch of more from well-established institutions, products that are being demanded, or at least they believe are being demanded from their customer base. And I think that's going to be really good and provide credibility to the overall industry.
Definitely be keeping an eye out for that. Aaron, how about yourself? Predictions?
Yeah, I think it's going to be difficult for institutions not to want to experiment, considering the market's just incredibly hot, and the regulatory changes are taking place or will take place in 2025 most likely. A lot of their perhaps clients will be asking them, how do I gain exposure to crypto or crypto-like assets? And I think launching these sort of tokenized products is an answer to that question. From a consumer standpoint, it's is it going to be a build it and they will come kind of deal? Probably not, which is why I think it's going to be really great that these institutions are listening to their clients and answering the questions about how to access and how to leverage this technology. And they'll be leveraging the technology themselves in an innovative way and of course compliant way, which I think we'll see a lot of in 2025. Some of the institutions that David mentioned, I know are definitely looking towards this space and already building and piloting. From a consumer standpoint, something that is just kind of speculative that my team and I have been thinking about and feature that we're adding to this platform Avant is, okay, there's been a lot of this narrative around staking, earning yield on your Bitcoin, right? Restaking, LSTs. And if anyone was at DevCon, I wasn't, but one of the largest takeaways that I keep hearing from people that are coming down from this event say that perhaps that narrative is not as robust as it should have been. And I think perhaps RWAs are an answer to why that didn't work, or a good alternative to why that didn't work, to compel potential investors. So to give an example, one of the largest, DeFi platforms out there, Aave, it's a unicorn startup. And what's really compelling is it's lending, right? You can collateralize your crypto and get USD, and you can earn yield on that US dollar or stable coin. What if there was an opportunity to take a RWA platform and do the same thing, right? So let's say it's on Bitcoin. I take one Bitcoin, I collateralize it, and I get some yield-bearing stablecoin in return. With that yield-bearing stablecoin, that yield is going to be relatively low. So what I can do is I can buy real-world asset tokens with that stablecoin, again, in a walled garden. Hopefully this distribution channel is robust enough to give the investor various options. And then that's another form of, I wouldn't call it yield, but it's another form of capital gain. They can sell that RWA whenever they want if it appreciates in value. They can track the value of these RWAs, send it back over to the USDC or US dollar stablecoin broadly. That's itself earning yield. And then that can be a way that, okay, I've technically staked my Bitcoin or I staked my crypto, but I didn't earn yield where it's coming from an AMM. I don't know where it's coming from. There is an element of that, but there's also an element of reality in real world asset tokenization, right? I can invest in an asset that's actually out there in the real world, even if it's just like a money market fund and you can't actually touch it. It's something that I think we're going to build out here on this Avant platform, and we're excited to see where it goes. So I think that's perhaps the consumer side, because there is a distribution issue, there's a demand issue in real world asset tokenization, and those things need to be fixed, especially considering, as stated before, these large players are going to continue to innovate and experiment in the RWA and broadly in the blockchain space for sure in 2025. It's the market's too hot to ignore.
I'm excited for that. I'm really excited, both from an institutional standpoint, but also what you guys are building, which I think will also attract a lot of, to your point, consumers and crypto natives as well that are familiar with, this concept, or at least have an edge to learning it a little bit quicker. But with that, Augustine, I'll turn it back to you. Thank you so much for having us. And David, Aaron, thank you so much for your time.